The first thing you need to keep in mind when you're dealing with futures is that futures trading is very much a zero-sum game. You could claim that perhaps with equities or something else, but with other asset classes, it's more philosophical. Equities, well, there's still value being created in the company. It's completely possible that everybody involved in the stock ends up gaining money. With futures trading, not so much. Futures trading is very much a zero-sum game. In reality, it's very tangible because on every single day, money is netted. So if I buy one contract of December gold today, and I hold it until tomorrow, that means that when I bought it, somebody else went short. I went long the contract, somebody else went short. There's always two parties involved. So I took the long side, somebody took the short side. Now at the end of the day, there will be a calculation done on who made money that day and who lost money that day. Even if we didn't close it, even if the contract is still open, the position is still open, so on, there will be a contract calculation, a settlement calculation on who should get money from who. And money will be transferred from one account to another every single day. That means at the end of every day, there's a winner and a loser for every contract. So that means that the only way you can possibly gain in this game, in the futures game, is on the expense of somebody else. But I will make the reasonable assumption that you don't have too much of a moral issue with that. But you should be aware of that fact.